live. Okay, and we're live. Good morning and welcome to another episode of the Crypto Hour. Today we are going to look at some interesting investing possibility of looking away from traditional markets and going a little bit deeper into the emerging markets. and it's something that it's although it's clear for everybody to see, it's still something that a lot of not just people but investment funds are kind of like wary of investing in, because in big part because of political uncertainty. Okay, but we'll have a look in a second, and I've classified emerging markets depending on different criteria. Okay, that not just economic criteria like economic growth and productivity, but also in institutional credibility and also leverage and external vulnerabilities. Okay, because these are all like obviously emerging markets are not as stable as existing established ones, so we need to consider different things while we value the likability of these markets for our investments. Okay, so let me just a second, just prepare. Okay, just a second. Okay, can you see my screen?
Yep.
Okay, so what we're looking at is kind of like we are in an environment where many people never look anywhere else but the US stock market for investment for many years, and in principle with good reason, because the US stock market has outperformed on average other markets by we can see by 50 to 60%. In this if we go back in time and we look at the old post-war period from 1950, we see that there have been times, especially in kind of this, if you see the red line is the average, at times in the 70s to the to the 2000s, and then again between 2005 and 2020, where emerging markets have outperformed the stock market, in particular between these two periods, between 90 and 95 and 2007 to 2000 and almost like 2013. Okay, so at the moment we can see we are kind of again the emerging markets are kind of overlooked mostly for investment. As you can see again, there's a lot more investment in US than emerging markets, and if you consider their weight in the world economy, emerging markets represent about 40% of the world GDP. But in terms of investment, represent only about 7% of global investments. So there's a big difference. So they are producing a lot, but there's little investment coming in because of different criteria. Okay. Now, sorry, is there a question coming? Just heard something in the background. If you wanted to ask question, please stop me and do. But if you don't, please mute your microphone so that if you're talking in the background, I can't hear you. Anybody there? No? Okay, let me carry on then. So moving on, as you can see, there are several criteria that I have used to to value emerging markets. So we got growth, okay, leverage, institutional credibility, and external vulnerabilities. Okay, Now, if we look at, this is a metric that we look at the last couple of weeks as well. So looking forward for 10 years, how is the working age population compared to the non-working age population going to fare? So it's because productivity is is definitely depends on demographics, and as the world population is progressively getting older, obviously some countries are going to suffer more than others because the population is getting older, and so they get to the point in 10 years where the working population has to support the non-working population. Okay, and the numbers are generally getting worse, but some countries, more than others, in particular, South Africa, we can see India and Indonesia and Brazil are the ones that are, the outliers from the average, where other countries like Argentina and Malaysia in particular, and Colombia, are got more, a more positive outlook. And although it is negative, also Poland is benefiting from Ukrainian influx of of people that have left Ukraine because of the war, and Poland being the closest neighbor, a lot of people, highly educated people are now part of the Polish workforce. So that's significant. And also this is the kind of distance from from the mean of the kind of GDP per capita growth. And although the numbers from China you can take with a pinch of salt because we don't know how reliable they are, but we can see which countries are making more positive steps with GDP, not just GDP in total, but also GDP per capita growing. And again, we see countries like Hungary, India, Poland, and Turkey as well faring better than others. Now, countries can grow because of GDP growth, but can also leverage by using borrowing, either private or public. Okay, and this shows how much the country is leveraged. First of all, in private as a percentage of GDP, and also as a public debt. So this will be the national debt as a percentage of GDP. Again, there are some countries that do better than others. In terms of private indebtedness, okay, in countries that are pretty much tapped out, as you can see, China, although they got huge reserves, are pretty much, I would say, tapped out in terms of private credit. Actually, this is a kind of like a big bubble that will need to be reined in, to ensure continuing growth, because this is the actual, the leverage. Although it works in a growing economy and when things are going well, it works the other way when things are going badly. Okay, so these countries are the ones they are most vulnerable to to increase interest rates and cost of doing business in general. Some of the countries they have got better situation in private GDP, as you can see again, Indonesia and Mexico. And Malaysia, I mean, it's kind of like it's a strange situation in the sense that Malaysia has very politically stable and has had for many years a positive a current account, so they actually get more money in than it's going out. Sometimes you have to look at these numbers in combination. But you can see which countries are generally more stable in terms of leverage, kind of like Indonesia, Mexico, Poland, and even kind of like Turkey, where Argentina, although it's got very low very low private indebtedness. They got very high, GDP, and that's obviously makes them vulnerable. And we know that. And also, when we go and look onto the next item, which is institutional credibility. One is political stability, that it's calculated by using the World Bank, several indexes from the World Bank, but also how volatile the inflation is, again, compared to the mean. So how close they stray from the mean. And we can see here that, not surprisingly, countries that have had problems with the currencies, both Argentina and Turkey, are the ones that really stand out in this calculation. Where if we look here at political stability, we see obviously the countries that are doing better generally are the ones that are part of the European Union, like the Czech Republic, Greece, and Hungary, Poland. But also, if we look at other what they would be considered, almost like second or third world countries, like Malaysia and Chile as well, are doing very well from the point of view of political stability as well. And this is important because obviously institutions have got certain criteria. They got country risk, and a maximum investment they have in each country based on how stable politically that country is. Okay, and the more unstable, the less willing they have to engage in that country, either lending money to them or directly investing in projects in that country. So this is very important from the point of view of influx of funds into a specific country. Now, in terms of the external vulnerabilities, so we can see what the current account is as a percentage of GDP. So is more money basically going out paying for imports, or is more money coming in because of exports? So the positive numbers would mean that those countries are exporting more than they are importing, so they have got a positive current account, and the negative numbers are the opposite. So you can see again, from that point of view, Thailand, Turkey, Greece, Hungary, and Chile have got the kind of like the net worst position in terms of current account. But also, this is the net investment position, which is another thing that it's relevant. So to see how much investment can be attracted from a different country. And we'll see again countries that have so there are two ways of getting indebted, either by doing it with public debt, or attracting, so borrowing money from outside of the country. And this is what this is telling you. Okay, so in the case of Greece, also we know because of the crisis that they just now starting to come out of, they got a really high negative net investment position. And also, the reserves will tell you how many months the reserves could keep paying for the current account. Okay, so Greece has got very, very low reserves, where China, as you can see, has got very high reserves because they are, they got positive current account that have been accumulating gold and foreign reserves like there was no tomorrow. So so we are, they've got large cushion, let's say, to fall back on. Okay, and so you see also countries that are net exporters of investments in a way, rather than they receive directly investment in the country, like China, Argentina, South Africa. So they actually invest abroad. And the same for Malaysia. So you can see Malaysia they got very positive current account because they are net exporters of commodities. and they've been running a positive current account for the past 10 years, with also a very stable political system as well, which makes them a very good prospect for investment. Now, so out of this, how do you combine all this into kind of deciding which are the best countries to invest on? And this is done in the next slide. Okay, so from one side we see the country score. So obviously the more further they are on the right, the better. And on the other side is the equity market valuation. So the higher they are, the cheaper the equity market valuation, and the further down, the more expensive to engage in those equity markets. So we can see by looking at this, there's basically three, I would say, four, but out of this, the three, for me, the best choices at the moment would be Indonesia, Malaysia, and Poland. Okay, the Czech Republic is not bad either, but Poland has got better prospects in a way, although Czech has slight better score. Okay, now let's look at the difference between these three countries. And by the way, if you are willing to put some of your money, some of your investment in equity markets, emerging markets, you don't need to go and buy individual stocks in the Indonesian market. You can simply buy an ETF that invests in that country's equities, and there's plenty of those for all these for all those three countries. So Indonesia, as the reason why it's one of the reasons why it's there is that as 20% of the world reserves of nickel, and also they have forbidden the export of unprocessed nickel. Okay, so what it means is that they're attracting a lot of investments for processing companies. They are setting up in Indonesia, to take advantage of the supply of nickel. So it's in a way, it's a way of attracting solid industrial investment into the country. And although it's never good to have market controls, but in this case, they might attract a very large investment from that point of view. Okay, and also that would have having attracting investment. It also makes more jobs available for the local population. So it's a good cycle to be able to attract to attract interest and investments. Now the equity market is trading at about 13.5 price earning ratio, which is reasonable, and so it's kind of quite a safe investment possibility. Let me just, if you want to just type a few where I want to begin. Otherwise you won't be able to see it. It's better. Okay, so a couple of ETFs that you can. Oh, it's a bit too big now. Sorry. Okay, is that still yeah, you can still read it, yeah. So these are Indonesian ETFs. Again, this you can buy through your broker. There's nothing difficult to do. The same way that you buy stocks and shares, you can buy some shares of one of these ETFs, which are again passive investments. Okay, so they got very little maintenance fees, and the funds are invested directly in a number of shares in those countries. Okay, the second one. So this is trading at the moment at 13.5. Okay, The second one that we're looking at is Malaysia. Okay, Malaysia again is a net exporter of commodities. As I said before, they've been running a positive current account, so they are they basically exporting more than they are importing, and that puts them in the best situation because it doesn't stretch their economic numbers and puts them in the hands of having to go and beg some of the bigger countries, and it's a very stable political situation, and so much so that at the moment they're in talk with Tesla as well to start investing in the country and to some of the factories in Malaysia, and also they're benefiting from attracting kind of the spill out from China. So countries there, obviously China used to be the favorite destination for cheap labor. And now, that is coming out now. It's into other countries. Obviously, Malaysia is not one of the cheapest, labor markets. But China has become quite expensive now, and this is spilling out into different Asian economies. Couple of ETFs. Again, and they are trading at the moment at about 15 price and ratio, and the last one we're looking at is Poland. Now, Poland again is an interesting case because they have been growing the GDP better than many of the European countries in the European Union, and also their demographics. Although Polish people do work outside of Poland quite a lot, they've attracted a lot of Ukrainian immigrants. They are very, very valuable for any country that has managed to welcome them because of the war. These are in general, they're not just economic migrants. These are generally people that are very well qualified because the education in Ukraine is very well regarded. And generally, they are people of working population. They are wanting to, they don't want really to sit there and get benefits, but they want to, they want to work and improve their life. So they're a plus to any economy that can welcome them, and Poland is really benefiting from this. Also, on top of this, Poland have the best valuation, so the cheapest stock market valuation, and it's almost like quite a bit lower than the other countries. Some ETFs, and again, this is no investment advice, guy. Yeah, you do your own research, but I'm just pointing some things to look at, and then you can do your own and think, have a look if they, you got some space in your investment portfolio for any of these. But if you want to have some some exposure to emerging markets, I would say these would be quite attractive investment from both the productivity and also from the political outlook in the future. I mean, we all know that Poland and Czech Republic are not just obviously they are solid because they're part of the European Union, but there's also now a new government that will be formed by Donald Tusk, which is was an ex-head of the European Union, and there's going to be a lot more, I would say less extremist and less right wing than previous governments, and more like Euro-friendly. And that again is one of the things that is seen positively, outside of Poland and outside of the European Union, to attract investment. So they don't want anybody that is will make crazy decision that just for demagogic and nationalist decision, that would worsen the way that the country is looked outside of the country itself. So this 1, 2, 3 for me are the best choices so far. So if you want to take a screenshot, please do it now, because I'm going to move away. Okay. Now a couple more things first before we go on to Bitcoin and other things. This week we've had a couple of. I mean, it hasn't been a heavy week from the point of view of news, as you can see. There's a few red news, but the main things have been if you follow the markets, you would have noticed a big move on the markets on Tuesday, because of inflation figures. Okay, so inflation figures came even below expected. They were expected to fall anyway. These are obviously in the US, by the way. They were expected to fall from 3.7 to 3.3% annualized. They even went even lower at 3.2. So the markets took it like a big like green light, thinking, well, these are good news that will get the Fed to lower interest rates sooner rather than later. But obviously, as we were talking last week, we are now in the part of sticky inflation. So it remains to be seen if we can then just as quickly move from this 3.2%, which is still, quite a bit higher than the target 2% inflation. And that will give the green light really for the Fed to start easing again. At the moment, the thing that has changed because of this announcement is that pretty much the possibility of another increase in interest rates in December has pretty much been priced out on the market. So like nobody expects there to be another increase in interest rates at the moment, and the expectations are for a cut. For cuts to start coming in May or next year. So still, again, the markets are forward looking, so they look at forward possibility and expectations. They don't just take a decision on what the situation is right now. Okay, so they are seeing this as positive news and improvement on the current situation. On another thing as well, I mean the thing that's being widely reported as well, like the pound, they said, or the inflation is now got to 4.6%, which is less than half of what it was at the peak when it went into kind of the double figures. And this has been in the news, especially the prime minister tries to portray this as a victory for his policy, although they have no influence whatsoever on this. Apart from stabilizing the economy a little bit, but this is all down to the Bank of England raising interest rates, basically. So I don't know what the government is claiming, as a victory for themselves, because the Bank of England is independent and they make decisions independently from the government. So and this is something, by the way, that was going to happen anyway when the cost of high energy compared to the year before was the one that really was felt between 2022 and 2023. Okay, is when obviously the war in Ukraine started, and so the increase in energy prices are felt, for the next 12 months. When we go like a year from that, then we're looking at prices that were already high. So that kind of drops off pretty much from inflation calculations, and because it's comparing the price today to the prices of 12 months ago, and now because we are comparing against prices that were very high, the inflation, the component of the inflation calculation is down to energy is dropped off really, and so this is why this is coming down. But obviously, 4.6% in inflation is still a very high number. Okay, so it's not something that an economy can manage for a long time. As we said, the current Western economies require cost of capital that is extremely low to carry on growing. So at the moment we have a cost of capital of around 5%, and we need it to be around 1% for the economy to grow. So we'll see now the conundrum that many countries have of balancing inflation with the slow damage that they are doing to the economy in the long run. And again, this is the day after in the US is the producer price inflation. So the money that the manufacturers have to pay for goods, and that has been coming down as well. And they also had some positive results in retail sales. They were expecting to decline slightly, instead they increased slightly. And there is kind of like a lot at the moment, a lot of positivity in the American markets, although it's not completely borne out by the future outlook. But at the moment, this is what is driving the markets. But the one thing that to look, and this is the one kind of negative, is when we look at the unemployment claims. I mean, I need to switch now, because it is not the one that we wanted to look at. Yeah, okay. So what we said last week, what we really want to look at is the continuing jobless claims. Okay, so the number of continuing, so people that are in total are asking for benefits. Okay, and so because there are obviously each month there's some people that from this number go back into employment, and some new people. So the number that is normally reported everywhere is this initial jobless claim. Okay, as you can see, we went from 218 to 231, but this is the really important number, because thinking out what is the total number of people that are out of work and asking for benefits. Okay, and it carried on again growing, about 20,000 more than expectation, and this number is now solidly a full kind of 500,000 above the recent lows. So it is something that, so this is how these decisions are taken by government take a while, because there is a lag between the moment the decisions are taken and when these things are felt in the economy. As I said, because there are interest rates that were very low for a very long time in the US, many companies actually fixed the capital needs at very low rates. So these effects are only felt when other privates like me and you have to renegotiate the private loans, like mortgages to buy a home, or private loans if you have any other big purchases, and compare it to what you were paying before. So obviously, if the interest rate is higher, it means that you have to put more of your earnings toward servicing the debt, and you have less money to spend in discretionary spending. Okay, so this filters out to the economy, and it can sometimes, it has an effect, is a lag that will carry on even when the interest rate starts coming down. The effect of the high interest rate will still work for a little bit longer, because again, it takes a little while for these effects to come through the economy. And the latest one as well, just announced today, and this is again another example in the UK. Another example of the deteriorating economy. Again, retail sales that were expected to grow by 0.5% actually went down. Which one is the actual? Is the first column? Okay, we're actually down 0.3%. So showing again, at the moment there's very high interest rates in the UK. The actual economy shows that it is struggling with it. So although inflation is coming down, the inflation and growth are two things that not necessarily go together. and this is why at the moment there's a big decision to be made if how long to carry on in a way these punitive levels of high interest rates that are physically hurting the economy, and that balance between hurting the economy just enough so that it doesn't go into a full scale recession, but at the same time changing the consumer behavior so the inflation will go down within the 2 to 3% range, where they could start considering lowering interest rates. Okay, now from here, let's go into now crypto. Crypto, let's say, it has very, very high swings, daily. But if you actually zoom out and, and you look at things, a little bit with detachment, not only you see that at the end, the average, are still in the same zone, but also you can start thinking, well, maybe you can take advantage of some retracements if you still haven't bought your crypto yet. There is still a chance because the market doesn't go out in a just straight line, but it has some up and down. Okay, so last week, Friday, this is where we were last week. Okay, in this green candle here. So as you can see, the market went up, the market came down, but pretty much we are at the lower end of where we were last Friday. Okay, so nothing really, again, not much. If you look at very short time frame charts, you would have seen a big surge up on Wednesday and a big movement down on yesterday. Okay, so we're talking about it's quite sizable moves here, 35 to 38, and again 38 to 35. Okay, it's nice, isn't it? So generally speaking, the situation hasn't changed. Again, if we're looking now, we are kind of firmly in a nice uptrend. And as I said before, when we left, this like green box where we stayed for, about July, August, September, October, 4.5 months, which were about 5 months, and very quickly we moved to these other areas where sellers are waiting. So at the moment, what's happening is that each time we venture into this zone, as you can say, there is some pushback, okay? Because there are people that at the moment they either made a lot of money selling at those prices, or they're thinking, well, they could make a lot of money because in the past, price from here went to here. So there is a good chance of, of at least a sizable pushback, as we have seen already. Already we have two, from 38 to about 35. So we have two such moves at the moment. But at the same time, we can see what the general direction of travel is. And so what I expect is that until the ETF, the Bitcoin ETF is approved, we still be playing in this arena for a little while, until we can actually break this supply and move on to the next leg up. Okay, but I don't think that we'll see a we might have a retracement, which may even go to the low 30s, maybe high 20s, as we can see, the previous moves. If we see sorry, just a second. Okay, just make it a little bit large. So if we want to look at how far, at the moment, this is the maximum the market has gone, and how far it has come from the last, the low of the previous periods. So a retracement of 50%, okay, will take us to about 31.5. Okay, and a 61%, which is another significant Fibonacci retracement level, would take us to just about 30,000, 29,008. So you can just do it yourself. You can mark it yourself and see what's possible. At the moment, the market has reacted at the first. If any of you, I mean, most of you would have heard of Fibonacci, which is a sequence of numbers that happens naturally in nature and describes many shapes. They are not regular, like, for example, the shape, the shape of how shells are formed and things like that. But these levels are the ones that generally they are significant. So the 23%, the 38%, 50 and 61% retracements are the one they are widely used by by market participant to judge if a retracement in an uptrend has actually come far enough or not. At the moment, you can see the market is reacting at this first level, about 23% retracement. So these two moves, so this is happened twice already, 23% down, 23% up, 23% down, roughly. Okay, so you can see how significant it can be if you can watch these and start applying them partly to your account. Okay, so nothing really changed recently. We're still playing in the same with the same setup as before, and at the moment we're waiting to fully engage in this range. We're still fighting at the moment to entry. Really, we've been there a couple of times. Both times we had a pushback. At some stage we will have a deeper penetration of this level and touch the 40,000, which is pretty much midway through this. So 40,000 is pretty near. It could happen in a day, it could happen in a week, it could happen in a year. Okay, so no crystal ball here, but definitely one thing that we can see is, okay, let's see the direction of travel, which is pretty clear so far since end of last year, and also pay attention to these to these moments, which are when first of all, this is when the Bitcoin halving is going to be, and I can't, for the life of me, I can't remember what this line was in March, so I'm going to take it off because I can't remember why I put it there. But it could be probably when the earliest time where we could have, I think I know now. Yes, it could be the earliest time where we could have a decrease in interest rates. Okay, starting to be lowered, and that obviously would have a positive effect on all risk assets. Okay, so the riskier type of investments, like obviously crypto is part of this, as is the stock market and so on. Okay, now for a little news. Where are we? Okay, now this is something that I wanted to share with you, and it's just a Bloomberg screenshot, and as you can see, these are the numbers that banks, institutions look at. Okay, because it's not just about returns, but it's risk-adjusted returns. Okay, so compared to the risk that you are taking, okay, there is kind of this ratio that is calculated, and if you can see here, so they're considering 3 Bitcoin cycles, 2 Bitcoin cycles, on just the last cycle. As you can see, in all 3 measures, Bitcoin in itself, just Bitcoin alone, has outperformed, all the other investment classes, even considering, from 2020 to 2023. So the last cycle is almost kind of like, more than double the results of the S&P, just a little bit less than double what the Nasdaq has done, which is obviously the one that attracts all the technology companies, and obviously, crypto being a technology itself. It takes part a little bit in that as well. But we can see, however you want to look at it, if you want to go back to 2013, obviously that the number is much bigger, but then in 2013, Bitcoin wouldn't have been on many people's radar, but definitely by 2020, the public interest in cryptocurrency have definitely changed, become more of a thing that is spoken at to the mass market. Sorry, where before, and even in 2017, was a very niche subject that not many people would have heard of, or if they had heard of it, they would have heard it with very disparaging remarks from traditional players. Okay, let's very quick, another 2 or 3 minutes for some other big news. Now, the other thing that you might have seen, there's been a spike as well in Ethereum price, because BlackRock has now submitted a spot ETF filing to the SEC, and of course, then if that is approved, then that's what we're waiting for, the Bitcoin spot ETF to be approved, and that will probably follow very quickly if the Bitcoin ETF is approved. Again, it could mean a lot of funds as well coming into Ethereum, and also that will slowly open the way as well to other cryptocurrencies, because as these are, it depends, obviously, it would depend on how much funds they attract, but if they are successful, then there will be providers wanting to attract more funds for people that want to invest more in altcoins. Another thing, okay, we've done this. Now, this is something that I just wanted to have a look at because I think is great. And you're talking about artificial intelligence, and now this is an example of what you can do with image generation through artificial intelligence. So all this clip that I'm going to show you is only about 30 seconds. Is something that is generated by Facebook. Is what they are going to make available to everybody, and it's being generated by just putting text descriptions and then image editing with text instructions. So just have a look at this and the instructions. A white fluffy bunny is standing in a room playing a trumpet. Make it dance happily. Color the trumpet and move slower. Add virtual reality and make it look like Hawaii. Wearing the hula skirt as a DJ. And these are something, pink blonde doll, okay? So this is something that can be done simply with a few commands of your keyboard. Okay, so you can imagine the things that will be done in the future, and how is, you can see how easy that is to create something like this. So that will make this kind of technology available to. It's already available through other platforms. Obviously, Facebook is wanting to get in of the craze of artificial intelligence. So they are just, with their marketing power, they are making themselves more visible, but all these technologies are already available on other platforms. Other things that are interesting. This is a crypto exchange. This has approval in principle for becoming a major payment institution. So to get in principle, they are said that they will receive a license. Obviously, they haven't received it yet, but they concentrate in cross-border payments. And they obviously just doesn't just involve crypto, but also fiat, stable coins, and the cryptocurrencies. So this shows you as well as the reason why many crypto and Web3 companies are moving to crypto-friendly countries like Singapore, where the legislation and the ecosystem is supportive of what they of what they're trying to do, and this is this is the future. What is starting to happen already, whether it's approved in Europe, in the US, we can see that you can't really stop this technology once it's available, whether it's AI or is it blockchain or other things, because it's not in one one company's or one individual power to stop any of this. So it can be made illegal maybe in a country or in a number of countries, but it's very difficult to stop something like this when the technology is available to everybody to run it in their own backyard. Okay, so so this is the future, and you will see more and more. It's another example you might have heard of if you follow crypto, Stripe. It's an app. It's a Bitcoin payment network that allows customers to pay for goods via the Lightning Network. So, okay, very, very little expenses, and it's the app that developed the system that is currently being used in El Salvador. Okay, so they developed the app, which is a proprietary app to El Salvador, but it's been developed by Stripe. And now they have they expanded its services. They were mainly a US service. Now they expanded to 36 countries, and then allowing the possibility to to buy Bitcoin through the app. Not just available in the US now, but available in 36 other countries. Now, obviously, there is a price to pay for that. At the moment, they charge 3.9%, but still, it is a possibility again of doing this completely away from the traditional banking system and to be done directly through the app. Okay, so. Also Strike is partnering with a payment firm, Refill, which uses again the Lightning Network, which is a layer 2 Bitcoin system to allow people to use their Bitcoins without the high fees connected to dealing on the main networks. Okay, so the fees on the Lightning Network are very low, although the security is less. You have to compromise something, but it's definitely makes crypto more usable to everybody to make small purchases of of $1 or $2 as well. And last but not least, I mean, I'm not saying that this is a candidate that's got any chance of being elected, but at the same time, this is one of the US candidate to the presidential election. Okay, now as I say, it's one of the minor candidates, and it's fine. But the fact that obviously they're using some of their budget, the money that people have put through to their campaign, to promote what they stand for, and so this what is talking about, which is talking about blockchain. It's talking about the 3 freedoms: freedom to code, financial self-reliance, and the freedom to innovate. Okay, and it states in particular something that is being talked about in the kind of blockchain community and beyond. That code is speech. So it's like being able to code is like having free speech and shouldn't be impeded. So the government, although the government can prosecute bad actors, it should not target just code developers, because code is speech. So the point that it doesn't matter how likely he is to be elected, but the fact that these things are being talked openly, in public forums. Obviously, they're doing for a reason, because they hope to be supported by people that are crypto friendly. But the fact that more and more of these presidential candidates are basically connecting with crypto is because they want to attract a big bunch of voters, but as a side effect of that is that people hear more and more about cryptocurrency, and it becomes a more a more day-to-day thing that is being talked about, rather than just something that's out there. What I don't understand is like a terrorist using to be funded and so on. So it's likely a big change in how cryptocurrency is being talked about. And as I said, big change is also coming with the Bitcoin ETF, because 27 trillion of investment under management and all the marketing connected to that will then get to work for crypto, and that will be one of the vectors that will push the next bull run. Okay, so let me stop now. I thought I only had about half an hour to talk about. We still managed to make it an hour. So, do we have any questions that we can talk about? A question from Archie. What percentage of your portfolio would you allocate to emerging markets? So that depends, first of all, how you split your portfolio. But I will say I would allocate 30% of personally, my own. This is my own thing. Okay, no investment advice, guys. Okay, so disclaimer. So I would allocate 30% of my equity portfolio to emerging markets. So obviously, in your investment portfolio, you would have different asset classes. So you have some money, in stocks and shares, some money in bonds, some money in gold and silver and precious metals, and some money in crypto if you're that way inclined. Okay, so within each one of these categories, then you have to go in and decide how to deploy this money, how to deploy this money. And within this share portfolio, I will definitely have a good 30% in emerging markets, because I think that they'll do very well over the next few years. Okay, Eric, somebody was raving about Chainlink. It's a sure bet, Chainlink, in the sense that it's Chainlink is a technology that all crypto projects will need to use. Okay, because Chainlink is one of the projects that connects cryptocurrency with the real world. Okay, so the Chainlink basically processes data. It's a I can't think of the word now. Oracle. Okay, Chainlink, it's an oracle. So that processes real data and makes it available in digital format for Web3 projects to connect to. So whatever project is being run will need to use, oracles to connect to the real world. Now, obviously, each chain would have its own version or its own oracle, but Chainlink is the largest one. Okay, the same as Uniswap is the largest decentralized exchange. Okay, so as crypto grows, Chainlink will take a big share of the oracle market. And basically, buying Chainlink is in a way is similar to buying Bitcoin. So you buy in the crypto market. Okay, buying the crypto market. So as the market grows, Chainlink will grow as well, because it's not although it's born as an Ethereum application, it's also active in it lends its services as well to other blockchains. So it's not just Ethereum based, but it's basically a data cruncher. That's how you should look at it. And Kujira, I don't know about Kujira. Can you tell us a little bit more about it? Are you sure you
yeah, it is. Kujira is the way it's spelled. And this guy was raving about Kujira still being small, but it's a coin on which you can do really everything.
Yeah, but there are so that's funny, Eric. That's funny what you just said, because you can, with most coins or most like layer 1 projects, you can do pretty much everything. But that doesn't make a reason to buy.
Okay.
So I don't know Kujira. Let me just bring it up because I haven't. To be honest with you, I don't. The problem is that sometimes, you know, a number of people talk about projects because they are trying to push them. It's a new, you know, it's a let's see. So obviously they had a big push, and probably this is why they were talking about it. But one thing you got to be careful of as well when people are talking about projects is that they would say something that cannot really be disputed, and then they will mix in something that they want to, in a way, promote because they're personally invested in the project. I don't have particular, you know, anything particular to tell you about the Kujira project without looking at it any, you know, a little bit deeply, but it's from what I can see just from the page is this is a blockchain for real yield, so it's looking like a fintech platform as such. And I say, without, this is my initial feeling, just by looking at the things, it makes me feel, and I might be wrong about it, it might make me feel like a project that's heavily pushed by venture capital. And as that, you know, you have to be careful in a sense. So you need the kind of investigation you have to make is in any project that you are considering is who has the power to move prices. Okay, and if you look at, for example, you know, projects like Solana is something that I never fully trusted, although it's one of the biggest projects. Okay, one of the top 10s, but the majority of the tokens are held by very few people. Okay, so that means that, you know, those people can work together to other, you know, maybe like for example, Solana, when you had that incredible growth from, you know, pretty much $0 to $250, you know, nobody was selling. Nobody of the big players was selling. Okay, because they had an interest of pushing the price as high as it could go, you know, and then wait to just sell at the top. So if you have a few people, they have an interest for the price to grow, you got to be careful because thinking, okay, when are they planning to exit? Because these things, you know, you take notice of these projects because saying, well, they grew about 100% last week, which is fine. But, you know, then as projects grow in size, it's more and more difficult to get these percentage gains. Because obviously, when you're a project that's valued at, I don't know, maybe 10 million, to go from 10 million to 100 million, so go like 10 times, is fairly simple with a little bit of marketing, a little bit of interest. But going from 10 million to a billion, or from 10 billion, you know, from 1 billion to 10 billion is a different kettle of fish completely. You know, and then you need to really, you know, convince people, not just that people they're in it to make some quick buck, but making, you know, people that want to invest in the project long term, you know, to be able to then grow to the next level. I mean, I don't know. I haven't looked at this, and maybe something that we'll, you know, take a look at, you know, in the next few days. But just think about what you need to look at before you make your mind up yourself. Okay. Okay.
Thanks very much.
That's all right. You're very welcome. We have any other questions? No? Okay, if we got no other questions, then I will wish you all a fantastic weekend. And I remind you all to go and follow Jonathan now for the next, so from 9:30 onwards for a Cardano-centered session. So you can hear from me the more general stuff, economy, and then I just really dive into probably the most exciting ecosystem right at the moment. So that, because a lot of the investment we've gone through, I mean, it's still the layer one projects are probably what most people would be invested in or should be thinking of at the moment. But for the future, where the major growth is going to be, once, you know, Bitcoin, the Solana, the Cardano have grown to the next layer in the investment cycle. The real growth is going to come from layer 2 projects. Okay, so the projects are quite small at the moment, so very difficult to invest in without any in-depth knowledge. Okay, and Jonathan is there to offer that in-depth knowledge in Cardano, because obviously being a stake pool operator is in that community, every day, and it can give you some tips. Again, no investment advice because we don't do that. I can give you some tips on the things that are really worth looking at, and maybe just put a few crumbs here and there that can grow into really interesting investment in the future. Okay, so the link is there in the chat box if you haven't had it before, or if you haven't been before. And with that, I'll close the call and wish you all a fantastic weekend. All right.